Another day, another story. The United Kingdom is forging ahead with its ambitious plans to become a hub for the crypto industry, with Economic Secretary to the Treasury, Andrew Griffith, announcing that the government is fully behind the use of stablecoins for wholesale settlements between banks. The stablecoin, a digital asset pegged to the value of fiat currency, could revolutionize the way financial institutions handle settlements and provide a more efficient and cost-effective alternative to traditional methods. Stablecoins have been gaining increasing traction in the crypto industry, with many financial institutions and banks around the world exploring the use of these digital assets for settlements. This is because stablecoins can provide faster, more secure, and cheaper transactions compared to traditional methods, which are often bogged down by cumbersome and time-consuming processes. Furthermore, stablecoins can also provide a hedge against currency fluctuations and can also facilitate cross-border transactions more seamlessly. Griffith explained that the stablecoin would not be issued by the government, but rather by a third-party provider. The government is already working on a regulatory regime for the wholesale use of stablecoins, with the Financial Services and Markets Bill, which is currently being debated in Parliament, giving regulators more power over crypto and stablecoins. This bill should be ready for passage by Easter, according to Griffith, providing a clear legal framework for the usage of stablecoins in the UK. The UK Treasury is also exploring the issuance of a central bank digital currency, CBDC, for wholesale and retail payments, but Griffith believes that stablecoins will get there first, due to the maturity of technology and current use cases in wholesale payment settlement. He also stated that the Treasury will issue a consultation on further regulating the crypto industry in the coming weeks, following the collapse of crypto exchange FTX. This will provide a clear framework and guidelines for participants in the crypto industry to operate in the UK and bring a sense of stability and trust to the market. Despite recent setbacks in the crypto industry, such as the collapse of crypto exchange FTX, the UK government is determined to establish the country as a leading centre for the crypto industry and harness the potential of this disruptive game-changing technology that could turbocharge the financial sector. The UK government's willingness to embrace crypto and stablecoins is a clear indication that it recognises the huge potential of this technology and wants to be at the forefront of the innovation. With financial institutions and banks around the world also moving forward with issuing stablecoins for settlements, it will be exciting to see how the UK government's plans to establish a regulatory regime for stablecoins develops in the coming months. If successful, the UK could become a global leader in the crypto industry and a hub for innovation, providing a wide range of benefits to businesses and consumers alike. In other news, Sam Bankman-Fried, the CEO of the now-collapsed cryptocurrency exchange FTX, invested $20 million in a venture capital fund managed by Paradigm, which later invested in FTX and FTX US. This arrangement has raised eyebrows and highlights the close links between Bankman-Fried and some of his backers. Bankman-Fried has pleaded not guilty to U.S. charges of fraud and money laundering after the collapse of FTX in November 2021. Prosecutors and regulators allege that he defrauded investors and funneled money from FTX customers to his hedge fund, Alameda Research, which spent heavily on risky investments in startups and crypto tokens. Paradigm has stated that Bankman-Fried was treated the same as its other investors in the fund and that the fund had made a general conflicts of interest disclosure to investors. Coinbase Global Inc., the largest U.S. cryptocurrency exchange, said that it will cut around 950 jobs, or 20% of its workforce as part of a restructuring plan. This marks the third round of layoffs for the company since last year. The company's shares were up 3.3% at $39.52 and it expects to incur about $149 million to $163 million in restructuring expenses. The announcement comes in the face of the crisis of confidence and weak trading volumes in the entire crypto industry. This is a reflection of the current challenging environment, said Oppenheimer analyst Owen Lau. The news also come after FTX filed for bankruptcy protection in November. A U.S. district judge has approved the disclosure statements for a proposed plan to sell some of Voyager's assets to Binance US, a step closer to the deal becoming a reality. The bankruptcy court for the Southern District of New York has given the green light but asked for the attorneys working on the deal to revise the proposed order documents before it is fully approved. The deal still needs to gain the approval of a majority of Voyager's creditors and will be the subject of another confirmation hearing in March. The proposed deal was initially opposed by the Securities and Exchange Commission, SEC, state regulators, the U.S. Trustee's Office and private parties, but the judge has said that the objections raised by the SEC and the state of New Jersey have been resolved. Thanks for watching, and don't forget to subscribe.